Chapter 4, Part 2. In Part 1, we looked at the common forms of ownership, such as sole proprietorship, partnership, and C-Corp. But now I'd like to look at some specialized forms of the corporation known as pass-through entities. Wouldn't it be great if you could get the limited liability of a corporation but avoid the double taxation of a C-Corp? In fact, you can. These are the pass-through entities, the LLCs, and the S-Corps that give you really the best of both worlds. So if you look at this graphic, if you consider what's left after taxes, compare the blue and the orange. And the blue represents the typical corporation. So if they had $100 of pre-tax earnings, at the end of the day, after double taxation, after paying at the corporate level and paying at the individual level, you'd have $55.25 of that left. However, with a pass-through entity, you'll notice in the orange, the company pays no tax, and it's taxed at the individual rate, and they end up with $65 after taxes. Now add some zeros to that. You know, if you do a little rounding, let's compare 55,000 to 65,000. That's really, really significant. So that's the beauty of the pass-through. Because pass-throughs are so appealing, you can look at the graphic that I've got in front of you and see how common they've become because they are so attractive. So let's explore this a little bit further. As I said, the two types of pass-throughs are the S-Corp and the LLC. And as you can see, the S-Corp is a bit more restricted than the LLC. However, in some instances, the S-Corp can be yet more attractive than the LLC for tax purposes. So I'm going to put a link to an interesting article on that kind of dives down a little deeper into the differences between the two. But for now, I'd like you to look at some of the general differences between the regular C-Corp, the S-Corp, and the LLC, or limited liability company. The LLC is so attractive that it seems like everybody I know who's starting businesses lately is going for the LLC, or at least some form of a pass-through. So I want to mention one other specialty type of organization, and that's the not-for-profit corporation. You're no doubt familiar with that. This is referred to as the 501c3 because of where it falls in the tax code. But I want to mention a specialized form of corporation, and that's something that's new, that's only been around for a couple of years. That is the benefit corporation. So I'm going to put a link to an example of that as well, but just let me explain it real briefly here. The executives of a corporation are obligated to consider the financial interests of their stockholders first and foremost. So what that means is that if a corporation wants to do something really nifty, you know, kind of save the world, make the world a better place thing, that's going to have a negative impact on their profit, legally they're really not supposed to do that. So the benefit corporation came about because it was a desire to merge the corporate form and make a profit, but at the same time kind of do some really neat things for the world. So it'll be interesting to see where that goes because it is so new. But do take a look at the example. And then wrapping up, I want to talk about a couple of other topics, one being a joint venture. These are really common when a firm goes into a foreign company in which they don't have a really strong foundation. So case in point, Universal Studios is currently going into China. So in order to do that, they have formed a joint venture with a Chinese partner who knows the market well. Then the last part of your chapter talks about mergers, where a firm grows larger by either acquiring or kind of merging with another firm. And so I'll give you a couple of examples of mergers. A horizontal merger, as you can see with the graphic, it's a good graphic, illustrates that it pertains to two firms in the same industry. whereas a vertical merger sort of shows some sort of backwards integration or forwards integration where they may be in line with each other. So a horizontal merger might be two ice cream companies. A vertical merger could be a dairy and an ice cream company. That might make some sense.